Hi, it's Shelley Reyland with Reyland Real Estate Group and Remax Coastal Homes. And I want to talk a little bit about today. It's not a very sexy topic, but it's super important. And I'm going to talk to you about 1031 exchanges. This is really a wonderful vehicle if you have any investment properties. If you don't have any investment properties, call me and we can talk about how we can get you into one because it's a wonderful way to grow your wealth. But if you do have an investment property, and you are interested in foregoing capital gains or postponing capital gains, there is a nifty little thing called a 1031 exchange. And all real estate investors, pretty much, if they're smart, use this tool. So the first thing to know is long-term capital gains in California. You're going to pay California capital gains tax, which is going to range, depending on your income, from 1% to over 15%. And the federal long-term capital gains rate is 15 to 20%. So you have to add those together. That's a huge tax hit. So you can do what's called a 1031 exchange. There's a couple key points. And then as always, if you have more questions, just call me. One, you can exchange properties. You can't touch the money or the profit. And it can be like for like. So if you have a commercial building and you want to buy a couple single family houses, you can do that. Or you have a single family house and you've made some money and you want to upgrade to an apartment building, you can do that. It's like for like investment property. The other thing is you can't touch the money. It has to go into what's called a 1031 accommodator or exchange. And I've got all those people that can help you with that. The first thing you want to do is identify the property to sell. And then the second thing you need to do is once you sell it, you can't touch the money and you buy your replacement property. And then you forego capital gains. And there's some neat little tricks to do after that too, if eventually you want to move into it. So those are the basic rules of it. The other part of it is if you sell your property and you're not sure what you're going to get for it or you don't know what you want, you can defer your exchange. So you can keep that money in your accommodator's account for up to 45 days to identify a property. So those are the basic rules about 1031 exchange. And then we can get really fun and complicated. And if you have some long-term goals about moving into a property and you have some properties to exchange, we can work all that out too. So give me a call, text, or email, and we can talk more about it.